today on the Prosperity Nation podcast.
You know, they weren't used to that. They were used to being a sole proprietor before, and now they have to act like a corporation, and they aren't advised on that. And for those reasons, it's not always a good idea to be an S-Corp, even if it does save you on some taxes. If it causes more complexity that you can't handle, maybe it's not worth it. Welcome to the Prosperity Nation podcast, the show where we inspire you to live a life you love without money holding you back. I'm Angie Grainger, and this is my co-host, Elise Eropkin.
Hey.
Hey, Elise. What's on the docket for today?
Oh, boy. Well, one thing that keeps coming up often, especially now, I guess, which I don't know why now, but is the payroll, S-Corp, LLC, sole prop. What do I do? What do I do? Whether it's an existing business or they're trying to form something new.
Hey, I know how we could just end this episode right now. Just tell everybody to go chat GPT the answers.
Yeah, obviously.
Why isn't that working, right? Why isn't Google working and people still have all these questions and what they're being told to do with their corps or S-Corps or LLCs? You know, the small business owners, it's confusing. We get it.
It can be.
Well, good. Let's dive in. Let's break that down and let's demystify some of these things that people are always asking us about, you know. But before we get in that, I had something funny come up recently on someone's tax return. It was a prospect that came in. This person, I said, "Oh, you did your tax return yourself." I could tell like there was a very strange like income on the Schedule C that didn't look like normal income. And then there was a huge write-off called labor expense. And I was like, what is going on with this return? Well, it turns out that labor expense was because they built a building. Right?
What?
Yeah, they built a building. Okay. And so therefore they just expensed it as labor against this settlement income or something different. You know, it was like some kind of odd income. But anyway, the whole return was like really, you could tell that it was a person who doesn't understand taxes and was just trying to like follow the formula and put things in. And at the bottom of it says we're paid prepare. It said self-prepared. I'm like, okay, totally makes sense. She went to TurboTax or something and just, you know, tried to answer the questions the best she could and got it done. Nope. She paid a paid preparer to do the return, and that is how they signed it, self-prepared.
Wow.
Yeah. So
they didn't want to put their name on that.
They didn't want to put their name on that, and I was like, when I was reviewing it, I'm like, oh man, they're paying self-employment tax on all this income, and they should probably be an S-Corp. And then she's telling me, yeah, I set up my LLC, but you know, because I'm getting a 1099 in my Social Security number, I can't put it in the LLC, and like all of this swimming in misinformation, and I'm just sitting there going, you know, this stuff can all be fixed. And then I was like, ugh, I don't want to touch that return. I don't know what that income or expenses are in that return, you know. But, you know, it's just that basic helping to understand. If you have rental property, it needs to go on the rental. You have to have a P&L for each property. Each different business you have should have its own P&L. You can use QuickBooks to do it, but you better be sophisticated to do it.
Yeah.
Anyway, it was really interesting conversation. I just put it that way.
You know, I run into people like that all the time, you know, and it's...
What's the biggest question that you get or you run across?
I would say right now for specifically small businesses would be the whole payroll thing. Am I supposed to be on payroll? I don't know. I think a lot of times too, a lot of these small businesses are getting the advice that they need to move away from being a sole proprietor and set up an LLC or a C-Corp, or not C-Corp, an LLC or an S-Corp, but they don't know anything else. They're just told by a CPA, someone that thinks they know what they're talking about, maybe an attorney also.
Or a friend.
That was in the someone who thinks they know what they're talking about category. Yeah. Attorneys do know what they're talking about, but they're getting told that they need to do this, but then that's it. It seems like they don't know exactly what that means. They don't know what they need to do. They don't know that they should be on payroll or not, or how much, or blah, 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 you know. So I think that's the biggest mystery that a lot of prospects, clients, friends, acquaintances Just anyone, once they find out, like, I feel like once they find out what I do, that's like the number one question they ask.
I
like,
know.
Like,
Yeah,
okay.
I ran across a prospect where I was reviewing a prior tax return, and they had a loan-out corporation because they're in the entertainment industry, and it was an S-Corp, which is all good strategies. But then talking to the person, it was like, oh, yeah, I just, it's whatever. It's like a regular bank account. I just move money back and forth.
Yes.
And I've never taken payroll. I've had this thing for 15 years, never taken payroll. And I'm just like, I think the goal here is to get you making more money, first off. And second off, get the stuff straightened out so you don't get reclassed by the IRS. And I think that's what people don't understand, because I've heard this, like, what's the 60-40 rule about taking payroll? And I'm like, I have no idea what they're talking about. And I had to Google that. Did you Google it too recently?
Well, I didn't Google the 60-40 rule, but I Googled how, because I was specifically asked, and I just did this for fun because I know this wasn't going to actually come up, how much should an S-Corp owner take in payroll? Just because.
Yeah, somebody once told me it's the 60-40 rule.
60-40 rule is the first thing that came up.
Really?
It was
when you Googled it. Oh my God.
It was an AI thing, but it was the first thing that came up is the 60-40 rule. I'm like, all right, well, I mean, I know there's not an IRS code that says how much you should take in payroll. Yeah. There's no 60-40 rule in any of the IRS, but that's like now obviously spoken rule.
Well, now it's AI, so it's permanent, right?
It's now a thing that people are using as like the official, unofficial IRS code for how much they should be doing.
And here's how much I rely on AI. Is the other day when I was searching for how many parts there are in the CPA exam, it literally said, I sent this to you. It said the 4 parts of the CPA exam, and then it listed out 6 parts.
There were 6 bullet points, some parts.
There were 6 bullet points with 6 parts of the CPA exam, and I was like, oh my God, so this is AI for you. This is what people are relying on for tax advice.
Right.
So
the 60-40 rule.
The 60-40 rule, it does not exist. There is no 60-40 rule. So, the bottom line is, why do people say, or why should you take payroll from your S-Corp? What is that all about? If you're a sole proprietor, or if you're an LLC and it's just you, you're going to report your income on your Schedule C on your tax return, and you're going to pay self-employment tax, your FICA, and your Medicare tax on that net profits of your business.
As a business.
Okay, plain and simple. As soon as you become an S-Corp, you are a corporation. And so that profit and loss is going to flow out to you. But it's flowing out to you, and how you're going to get taxed on that income, whether or not you take the cash. So you're not paying self-employment tax on it. So great, right? That's like a way to completely avoid self-employment tax. No. Because the IRS goes, no,
we want our money.
We want our money. So if you don't take any payroll out of your S-Corp, and you get all the profits and you pay your normal tax on it, and you take all the cash out, those are distributions. And what happens is the IRS can come back and say, no, none of that was distributions. You earned that money by working in the company. That's wages. That should have been W-2. Now you have to pay all that self-employment tax, or that FICA tax and that Medicare tax for all the years you did that, or as far back as they're looking or going, and all the penalties on it. So you're risking the benefit that you actually could have by taking a normal amount of wages out, and then just letting the rest not get taxed for self-employment tax. You're risking that by having 100% of it getting taxed at self-employment tax. That's the risk.
So, okay, let's take it back a notch. What is a distribution then?
That is a great question. How would you describe it?
It's money. I mean, I would describe it as the additional, essentially, profits that owners are allowed to take out of the company, but it should be profit, not when you're losing money, you take more. It's when you make money.
Well, that's what, that is another huge risk. And I saw a lot of this during the pandemic and stuff, right? Because you get a PPP loan, or you get any loan, or you increase your credit cards, and your business is losing money, but you are still taking money out of it. Then what are you doing? You're borrowing money for yourself. Yeah, and the IRS is not going to look at it that way because it's not, I mean, the IRS is going to look at it as you need to pay taxes on, whatever's happening in the business. And if you take all that money out without having any basis in it, then all that money is taxable also. So that's when the company's not. But going back to your question about a distribution and profit distributions, it's very simple. It's very, very simple. When you are working in your business, you are performing a role in that business.
Job. Right.
Yep. If you are the CEO, you're the CEO. If you're in a construction business and you are the
project manager,
the project manager or the electrician or whatever, and you're there, you get a wage for doing that job as if you would pay anybody else to do that job. But then you, as the owner, get to take distributions of the profit in compensation for the risks you're taking as an owner of the business. And it's quite simple like that. And if you think about what is a normal wage for a person that you would hire to do your job in the company, that's what you should take as a salary. And then the rest you can take for distributions of profit for being the owner. You have two hats.
That's exactly what I told a client recently that asked. And I just said, look, if you were to hire someone else to be the CEO of your business or the president or whatever, your role, what would you pay that person? And that's what your salary should be. And they're like, well, what is that? Or, that's the percentage or the code. I'm like, well, there isn't one because, your, let's say, small business is only making a few $100,000 a year that you're going to pay someone a different salary than what, let's say, Tesla or Apple would pay their CEO or president or whatever. Like those are two totally different things. So you have to analyze, like for your business, what would you actually pay someone?
Yeah. And, in a small business like that, too, I mean, you can go to Indeed or, something and find out what are office managers, for example, getting paid. And if it's $40 an hour, then, take that as your salary. Right? And yes, you have a lot of room. You have a lot of leeway. And you can take a bonus at the end of the year and run that all through payroll if you want to. There's a lot that you can do and you have leeway. But the point of all of that and the way we advise on it is to make sure that you're safe from getting audited. I mean, you may get audited. We can't stop you from getting audited. But we can, support and say, look, this is a normal wage. And this is the only amount that should be subject to self-employment tax. Everything else is on my profit distribution for my risk of being an owner. And so that's the basics of it.
I think that sums up pretty well.
You guys are so good at explaining things. It's just beautiful. Thanks, so clear. I love it.
Thank you.
Thank you. It is hard, but these are the things I think, from our perspective or for me when we get new clients or probably when you're talking to prospects, like all the advice they're getting on setting up S-Corps. It's, that could be the right answer, but there's not all of the other things that you need to worry about being an owner.
Yeah, and I think the common thing is that people taking the advice to get an S-Corp set up, and then they have no idea that now they have to file another tax return, which is an expensive tax return. And they have to set up payroll, and they have to pay payroll taxes, and now they have filing reports quarterly for all the payroll stuff that they weren't used to that. They were used to being a sole proprietor before, and now they have to act like a corporation, and they aren't advised on that. And for those reasons, it's not always a good idea to be an S-Corp, even if it does save you on some taxes. If it causes more complexity that you can't handle, maybe it's not worth it.
Yeah, and I think people don't look at the full picture because they don't know. And
they don't know.
They're only presented one tiny piece of advice and, I guess, evidence on why they should do something. And then, the amount of people that become clients that they just learn more and more that's needed, it's like overwhelming. And for people who maybe aren't making that much, it might, like you said, it might be easier just to continue on the Schedule C, be a sole prop for a few more years, and if they do start to grow, then we can switch over.
Yeah, exactly. And that's where, for us, why we work with them all year long, because we can make those decisions as we go along, the right entity classification, the right amount of payroll. Besides payroll, it's also how much withholding do you take out? Right. Well, now you're the owner of the company. You're going to have to pay tax on the profits of that company. And you're talking about taking a W-2. So how much tax are you going to withhold out of your your wages in order to get that paid in. And now, the picture gets a little bit harder to understand, but that's where we do really well in this, because we know how to eliminate tax surprises. See, there's no reason for a tax surprise. It's all a calculation. You can calculate it and know exactly what it is. And so if you do that in the middle of the year and not after, or April 14th, then you have the ability to make adjustments to it based on what else is going on in your life, because at the end of the day, behind that S-Corp is a person. And that person is getting affected by that payroll, those withholdings, those distributions, and where that money is going. And so that's where planning and organizing and getting your numbers really good and under control can really make a difference in how that experience goes for you. So here's the thing, is that we have like this S-Corp compliance checklist, and it's not necessarily compliance, but we know all the areas that people come to us with that are not being done properly. We know where there's usually tax deductions that are getting lost. And, part of that is, I know people don't like to do this, but what's happening in your personal finances actually matter, because we found more money by not only cleaning up the books and getting all the deductions proper on the business, but then doing that on the personal finances and getting personal finances in QuickBooks too. Because believe it or not, there is so much money you are probably still running through your personal without even knowing it that should be through your business. And then we can get that reimbursed from the business. And you can set it up to where it is your home office reimbursements, your mileage reimbursements, your renting the rooms from your house for business meeting reimbursements.
Healthcare.
Can be medical, it can be healthcare, it can be gym memberships, depending on how you set these plans up. And your dog, Riggs, is a tax. No, now we're going over that.
He's the security of my office. I mean, if he wasn't barking at everyone that walked by my house all day long, then they wouldn't know that there's a dog here. So if they saw my computer in the window and wanted to steal it, but now they hear the dog, they're like,
Just to keep us all in the clear, I'm going to just make very clear for our audience that they're joking. They're kidding at this point right now. They're kidding. IRS, this is not what they actually think.
IRS.
Yeah, good disclaimer.
Thanks, Sean. Yes, that was 100% a joke.
But anyway, by being able to go through and, checklist, are you getting this deduction? Have you gotten this reimbursement? Have you set up the payroll correctly? Have you gotten the right deductions? And the way you have to do payroll and health clear is different for, S-Corp owners and stuff. But there's a lot of little, technical little things that we go through that not only make the whole experience easier for the business owner because they're not stressing about all these things, but also we know where to put the right deductions and make sure you get the most deductions and get them throughout the year and not wait till April 14th and then, scramble and trying to find all these things and get your taxes done, I always like to remind people that the point of bookkeeping is not to just do your taxes. It's like at the end of the year, throw your books together to turn them into your CPA. Do you think we like that?
Did I tell you I had a client once, this was a few years ago, we were talking, I don't even know how this came about, but we were talking and I'm like, I asked them why do you need a P&L? Why do you need financials? And I'm like, well, for taxes. I'm like, oh boy. If that's the only reason you think you need a profit and loss statement and a balance sheet, then we are in trouble. Because and I thought to myself, how are you running your business? And this was a business that I think they made at least $500,000 plus. I don't remember. It was a few years ago. So it wasn't a tiny mom and pop, just $100,000, $200,000. They were doing okay. And this person had a few, maybe 5 or 6 employees. And the only reason for keeping books in their mind was for taxes once a year.
Yeah. Well, that's what, unfortunately, bookkeepers, a lot of bookkeepers, I don't want to slam on bookkeepers because they're very important.
We like bookkeepers.
We do. And oftentimes they're self-taught, and they're self-taught by QuickBooks.
Yes.
Right. And the bookkeeper's point of view is getting things categorized correctly on the profit and loss statement. That seems to be their responsibility, and I agree with that. When things come through, you put them in the right spot, right? But what's missing is double entry accounting. And double entry accounting follows our philosophy of how to actually grow wealth, which is 4 simple parts: assets, liabilities, inflows, and outflows. That's it. So double entry accounting, if you're posting something on the P&L, that's only one side. Where does the other side go?
Who knows?
Who knows?
Just kidding.
Exactly. And that's
no one
why
will ever know. It's just such a mystery.
it just goes.
It just goes somewhere. QuickBooks, you know what? QuickBooks puts it somewhere.
It's like the dryer in your socks. It just goes.
Right.
That's how it is.
That is.
But you know how much money we found because of those kinds of errors? Because it's a double entry system, which means it's an enclosed system. Yeah. That means you can't just have money come in and no understanding of where it came from, or you can't just have money go out.
Or you can't create expenses.
You can't just create an expense. Right. That's right.
I've been asked that a few times. Well, can't you just add it?
Right. Just add it.
No, not quite.
Yeah. But the whole point of it being that double entry and assets, liabilities, income, and outflow, we shortcut that and call it ALIO, A-L-I-O, ALIO. Assets, liabilities, income, outflow. It works really good on your personal finances because it's so simple to understand. But in a business, we just call it the balance sheet and the profit and loss statement. And the assets minus the liabilities equals the equity, if I can even say it. And then assets, oh my God, I can't even talk. Income minus expenses equals your profit and loss, right? So those are only 4 elements. And so the more that you understand and control how those work together, the more you can read the numbers like the money whisperer. You read it, you can see, well, those assets are underperforming, or, oh my gosh, this thing's been losing money, all of it. Where'd the money go? Oh, look, the debt increased, the capital contributions increased, the cash account's down. You can read it like a storybook. And that's the wisdom that we like our clients to have too, but you can't have that if you have chaos. And so it's getting all of that streamlined, and then that's how we can get all of those deductions for your S-Corp or your LLC or whatever your structure is. But then we can also see what's missing, because you can't see what's missing if it's in chaos. You have to get it orderly first, and then you can say, they don't have this, they don't have that, they don't have this. Here's the point, is the bottom line is that there's no 60-40 rule for how much payroll you should take. Just scrap that. That you're not going to write off your dog. Just scrap that. Not yet. But what you can do is get a lot more deductions, most likely, in closing of money leaks on your S corporation or LLC or whatever your structure is. And you're going to get that when you have really clean, perfect books and you have control over your money flows. And that's where we help best, because we can both put the controls on the money flows and we can figure out what the best deductions are. Mm-hmm. So just to demystify the S-Corp questions and all of that, we get it. It's hard. It's confusing. But there are people out there like us who can actually make it simple for you.
Yeah, and it's not AI.
It's not AI. It's not Google. No, I can guarantee you that. But hey, if you have questions about it, let us know. If you have a question about how it works, probably other business owners have it too. We're happy to address those. Make it simple, kind of bring life to this stuff. It doesn't have to be complex. It's only complex when you don't understand it. But when you understand it and things are under control, it can be quite simple.
Or it's complex if it doesn't make sense. I've noticed that too.
Right.
I mean, if it just is so wait a minute, what? It could. Then it's obviously there's no logic. So maybe that's not right.
That's right.
It's that confusing. So
because when it's illogical, it's actually a little bit insane there.
Yeah.
All right, well, we'll have to pick up that topic again. I love talking about insanity when it comes to money and life, I guess, too. So, all right, well, let us know what you think. We want to hear from you.
Yeah, go ahead and follow us. Follow our podcast. Subscribe to our podcast. Follow us on social media. We'll swap those. You can also email us at stories@prosperitynation.com. Yeah, I guess that's it, right?
Yeah, looking forward to hearing from you.
We'll see you. Yeah. Bye.
Bye.
Thanks for joining us today. Like and subscribe to videos from us on YouTube. Follow us online for the latest episodes, updates, and more. And invite others to join us at prosperityNation.com. That's it for now. We'll see you next time on the Prosperity Nation podcast.